All right, get ready, because if you've been keeping an eye on the crypto markets, well, you know exactly why today feels different. Bitcoin just surged past $114,000. I mean, it blew through a resistance level it's been testing for weeks. That's a number that's definitely sparked conversations everywhere. Welcome, everyone, to a brand new deep dive. Today, we're tackling that big question, the one on everyone's mind. Is this recent move a true breakout? Like, are we seeing a sustained uptrend, or are we maybe looking at another fake out, just a temporary pump before things pull back? We'll dissect what's truly driving this explosive price action, what we should expect next, and crucially, what all of it means for you.
Yeah, exactly. And for your deep dive today, we've really meticulously pulled together insights from the Crypto.Report, some sharp analysis from industry voices like Bankless, Josh Olszewicz, too, always insightful, plus, of course, the very latest headlines that are shaping your market view right now. Our mission, as always, is to cut through all that noise, distill those crucial nuggets of knowledge and help you understand not just what's happening, but maybe more importantly, why it matters for your decisions.
Absolutely. Our goal here is to uncover those key signals, weigh the possibilities that lie ahead, and, ultimately prepare you for both the volatility and, let's face it, the undeniable opportunities coming your way. So let's not waste any time. Let's jump straight into the immediate catalyst. Bitcoin clearing $114,000 today, September 10th, 2025. This wasn't some slow crawl, right? It was a definitive, powerful rip. What ignited this surge?
Well, what's fascinating here is that this wasn't really a singular event. It wasn't just one thing. This move was like a confluence of strong, identifiable factors all aligning kind of perfectly. At the top of that list, you've got the Japanese BTC Treasury, MetaPlanet. They were making massive waves again. They're raising another $1.4 billion, issuing 385 million new shares. And the vast majority of those proceeds, specifically earmarked for direct Bitcoin purchases. This isn't just, a big investment. It's a massive, repeated institutional vote of confidence in Bitcoin as a treasury asset.
That's a serious commitment. I mean, from a publicly traded company, that's huge. But just playing devil's advocate for a second, how significant is one player's move, even a big one like MetaPlanet, in a market this fast? Could this be more symbolic than, truly moving the needle long-term on its own?
That's a fair question. And look, while no single entity dictates the market, MetaPlanet's repeated, very public commitment and this capital allocation, it sets a precedent. It really does. It kind of encourages other corporate treasuries to look at Bitcoin seriously, shows it's a viable, maybe even strategic move for public companies now. It shifts perception and it adds this layer of institutional demand that just wasn't really there a few years ago. Plus, beyond that, we've also seen those steady, consistent inflows into the Bitcoin ETFs. These funds, they just keep providing this balanced buying pressure, this constant underlying support for the asset, absorbing supply, signaling sustained, broader institutional interest.
Okay, so it's a mix then. Direct, significant institutional buying from MetaPlanet, plus that consistent underlying ETF demand. Yeah. What else was in this perfect storm?
The final piece, and maybe the most immediate macro catalyst that really got markets moving, was the U.S. Producer Price Index data, the PPI. It came in way lower than expected. That's a significant signal. Points towards cooling inflation, which in turn significantly eases the pressure on the Federal Reserve regarding interest rates.
Right. And this is where our analysis shows things get really compelling, doesn't it? When you connect those dots, you've got a weakening dollar combined with softer inflation. It acts like significant bullish fuel for risk assets.
Yeah.
Right across the board.
Yeah.
We saw markets react almost instantly, not just crypto, but, traditional markets too.
Yeah.
Precisely. That macro environment creates a perfect tailwind for assets like Bitcoin. They thrive on liquidity and a reduced fear of aggressive monetary tightening. It suggests that maybe the worst of the hawkish Fed policy is behind us, freeing up capital, letting it flow back into growth-oriented assets. However, this does raise an important question for market participants. Despite this current wave of bullish sentiment, there's a pretty significant event looming on the horizon, the Federal Open Market Committee meeting, the FOMC, and that's now just, 7 days away.
Yeah, and the FedWatch tool is showing a 100% probability for a rate cut. I mean, that's about as certain as things ever get in markets, right? Does that mean the good news, this impending rate cut, is already completely priced in? Baked into the market price? And if so, how do we tell the difference between just a healthy pullback and something? Well, more concerning, a reversal. How can our listeners spot that?
It's a very strong possibility that it is priced in. Yeah. We often see this thing called the sell the news phenomenon. If the Fed delivers exactly what everyone expects in this case, a rate cut, the market might just react by taking profits right after the announcement. Traders who bought expecting the cut might see it as the perfect time to sell, could lead to a temporary sell-off. Now, Differentiating a healthy pullback from a reversal often comes down to the volume behind the move, and key technical support levels. Like a sharp drop on high volume below established support, that's more concerning. Whereas like a gentle lower volume dip, that might just be profit taking, healthy consolidation.
Okay, so with that potential sell the news dynamic hanging over us, what are the absolute must-watch data points for our listeners in the immediate future?
Right. You'll want to pay very close attention to a couple of crucial reports coming up. Tomorrow, actually, we get the Consumer Price Index, CPI data, along with initial jobless claims. Now, if these reports confirm cooling inflation and maybe a softening labor market, well, that could absolutely extend the current rally, give it more legs heading into the FOMC meeting. Then next week, obviously, it's the FOMC decision itself, always a high volatility event, always. But, as we were saying, because rate cuts are so widely expected, the market's reaction to the decision, and maybe even more, the Fed's commentary about future policy, that might actually matter more than the rate cut itself.
Let's zoom out a bit then. How might these macro shifts and Bitcoin surge, how could that ripple through the rest of crypto, particularly for altcoins? Because while Bitcoin's grabbing all the headlines, it really feels like there's a big shift happening under the surface for, other assets.
Oh, absolutely. If we connect this to the bigger picture, with rate cuts now essentially, locked in the market's mind, we are seeing a very clear rotation of capital. It's happening. Both stablecoin dominance and Bitcoin dominance are falling. That's a clear, pretty unambiguous sign that traders are moving into what we call higher beta plays. That's just a fancy term for assets, in this case, altcoins, with potentially larger returns. But yeah, also riskier returns. People are actively looking for where the next big gains could be, moving out of those safer havens, maybe into more speculative assets.
And which specific altcoins are already showing that kind of strength? Which ones are really standing out in this rotation already?
Well, among the big caps, the ones that are getting mentioned, we're already seeing strong runs from Solana, ticker SOL, Hyperliquid HYPE, and Mantle, MNT. These are the ones highlighted in our sources as already having significant momentum, suggest early capital inflows, increasing interest.
Okay. And what about the broader altcoin market, beyond just those few big names?
That's where the others chart gets really interesting. This chart, it tracks the combined market cap of all the altcoins outside the top 10, and it suggests there's, plenty of room left for growth. Quite a bit, actually. If this others chart just revisits its previous all-time high, that could mean a staggering 50% gain from where we are right now. And if it breaks out above that, that could unlock even more substantial upside for the broader altcoin market. It's painting a very, very bullish picture for the overall altcoin ecosystem once that capital rotation really kicks in. Anyway.
Even with all this positive momentum, all this potential, things never move in a straight line in crypto, do they? We can't just expect a smooth ride up. How should our listeners mentally prepare for the volatility that's probably still ahead? Because, it's one thing to say shakeouts are coming, but it's quite another to actually live through those stomach-churning dips.
Absolutely not. Straight lines, not in this market. As the saying goes, nothing moves in a straight line. And with the FOMC meeting right around the corner, shakeouts are likely before any sustained uptrend really, really solidifies. Think of it like a roller coaster, maybe. You know the big drop is coming, but that doesn't make the actual plunge any less exhilarating or, for some, maybe terrifying. The key is really to have your strategy in place before the ride starts, so you don't panic when the momentum shifts, right? We should anticipate periods of, heightened volatility, prices pull back, maybe sharply, potentially liquidating over-leveraged positions, the real sustained altcoin trend. That might truly kick in during Q4, once the immediate uncertainty of these rate cuts is behind us and the market has fully digested what the Fed did and said.
Okay, so beyond the daily market movements and all this price action, the industry itself just keeps evolving at a blistering pace, really. Let's touch on some of the significant news items you might have missed, things that show this ongoing innovation and institutional adoption.
Certainly. Yeah, first, a really significant development. Binance is partnering with Franklin Templeton, the massive $1.6 trillion asset manager. They're partnering on tokenization. And this isn't just some fancy buzzword, right? It's about making traditional assets think. Stocks, bonds, even real estate, making them more accessible, more divisible, tradable 24/7 on a blockchain with near instant settlement. Just imagine buying like a tiny fraction of a skyscraper or your favorite blue chip stock right on a crypto exchange.
Yeah.
That's the long-term vision these giants are building towards, and it could really redefine your future investment options.
Oh, yeah, that's a powerful statement about the future, that integration of TradFi and crypto. And speaking of institutional conviction, MetaPlanet's back in the headlines again, just reinforcing that institutional interest we talked about earlier. Another $1.4 billion being raised specifically for direct BTC purchases.
Indeed. This repeated, significant capital allocation from a public company. It's a powerful indicator. This isn't just a fleeting trend, Institutions seem to be really digging in for the long haul. Then we have Paxos pitching PayPal rails for the hyperliquid stablecoin, USDH. They're proposing to integrate USDH right into PayPal and Venmo, and the revenue from that venture reinvested directly into growth. This positions USDH as a pretty serious competitor against existing stablecoins, like Frax, for example.
That definitely has the potential to be a game changer for mainstream adoption, for sure. But what are the biggest hurdles, like regulatory or technical hurdles Paxos would face trying to get USDH integrated into huge platforms like PayPal and Venmo? Seems complicated.
It's a crucial point. Yeah. Regulatory clarity is always the primary hurdle. Always. Integrating a new stablecoin, even one backed by a regulated entity like Paxos, it would mean navigating these really complex compliance frameworks across multiple jurisdictions too. Technically, it'd also involve ensuring seamless interoperability, robust security protocols, and just managing the sheer scale of transactions on these established high-volume platforms. It's a massive undertaking, no doubt, but the potential upside for user base and revenue, equally significant.
And finally, Kraken is expanding its tokenized stocks product X stocks into Europe. This gives European users access to tokenized U.S. equities, things like NVIDIA, Google, and they've already seen significant traction, apparently, like $3.8 billion already traded on the product, which just highlights the demand for more accessible blockchain-based access to traditional markets. So these headlines, collectively, they show the infrastructure of crypto growing rapidly, becoming more integrated into the broader financial system, moving beyond just speculative assets.
Right. Now, let's get into some specific takes from leading voices in this space. Bankless recently did a deep dive into Hyperliquid. We just mentioned them as a strong performer. What were their main points about this fastest growing exchange?
Yeah, Bankless's analysis of Hyperliquid was pretty thorough. At its core, right, Hyperliquid is a trading app for crypto perps. Think of them like futures contracts, but unlike traditional futures, they don't have an expiry date, which means traders can hold their leveraged positions indefinitely without worrying about rolling over contracts every month. That's a huge draw for active speculative trading. Why people are flocking to it, Bankless highlights, is because it feels like a big centralized exchange in terms of speed, functionality. But, and this is crucial, it allows users to maintain self-custody, keep control of their own wallet. It's incredibly fast, lists new coins really rapidly, and apparently boasts deep liquidity, makes it ideal for active traders.
So it's combining that slick, centralized exchange feel with the core crypto principle of, decentralization and self-custody. That's a powerful combo.
Exactly. And it's generating real money. Millions per day in fees, they said, from a relatively small but very active group of traders. And crucially, the HYPE token design is, it's quite clever. Most of the fees generated are used to buy HYPE right on the open market and just hold it, which obviously supports the price by reducing the liquid supply available. Their launch story is also pretty unique. They had no traditional VC sell pressure at launch, apparently, built a loyal community through a big airdrop. And they've expanded too. It's something called Hyper EVM, allows other DeFi apps to plug directly into its liquidity, turns it into more of an ecosystem. However, it is important to note, Bankless points out, that team tokens do start unlocking around November. That's something to watch for potential selling pressure down the line.
Okay. And what were the main risks Bankless identified for Hyperliquid? Because every promising project has its downsides, right?
Absolutely. Yeah, Bankless highlighted several key risks. Fewer validators today means it's more centralized than, say, Ethereum. That's one. There's bridge risk when you're moving funds onto the platform. Potential future KYCML pressure from regulators, always a possibility. And it's certainly not ideal for just parking funds long-term, given its focus on active trading. So their takeaway was pretty clear. It's a great product, strong cash flow, but it comes with real risks, best suited for active traders, long-term holders. Probably should size their positions carefully. Be aware of those risks.
Okay. Beyond the immediate market action, it's always valuable to hear how leading analysts are positioning themselves. Let's pivot now to Josh Holzevich's September setups analysis. What's his overall message as we head deeper into the month? Sounds like he's leaning towards caution.
Josh's message for September is indeed simple and clear. Don't force trades. That's basically it. He notes that many charts across crypto and traditional markets just look like nothing to do right now, his words. In crypto, specifically Bitcoin and Ethereum, stuck in what he calls boring ranges. No clear setups until higher resistance levels break. And most altcoins, he suggests, look kind of weak unless Bitcoin or Ethereum make a really decisive move first. Yes, a couple of standouts, which actually align pretty well with some of our earlier points. Solana, still showing relative strength, making higher highs, indicates continued investor interest there. And HYPE, also holding strong, potentially breaking out towards that $65 to $78 range he mentioned. But overall, yeah, his view for crypto in September is largely wait and see, suggesting that better setups, more clear opportunities might come in October. And looking at stocks and macro, Josh notes U.S. equities like the S&P, QQQ, they're choppy, not offering much clean trading right now. Interestingly, China stocks, breaking up after years of consolidation, potentially looking more attractive than U.S. big tech for maybe the first time in a while, and both bonds and gold look strong right now. Gold in particular rallying pretty hard since Jackson Hole with no clear top in sight yet.
So a cautious approach then. Focusing on relative strengths within crypto, but also being open to opportunities outside it. Is that his bottom line?
That's exactly right, yeah. Josh's bottom line is mostly nothing to do in crypto right now, urging patience. For those who are looking to trade, focus on assets showing clear relative strength, like that Solana and HYPE we mentioned, but he suggests that bonds and gold might actually be, better trades this month, given their current momentum and lack of clear resistance. So the key takeaway from his analysis, patience is paramount. October could bring the real opportunities for more sustained moves in crypto.
Okay, wow. We've covered a lot today. Bitcoin's explosive move past 114K, the key drivers behind that surge, the looming FOMC decision, potential for a sell the news event, that exciting altcoin rotation that seems to be starting, and how top analysts like Josh are advising caution for September while definitely eyeing Q4 for bigger moves.
Yeah, and given all these conflicting signals, a clear Bitcoin breakout, strong altcoin momentum starting, yet these cautionary notes about selling the news and a nothing to do September, how might the market react if the Fed's rate cut, which is now 100% priced in, is met with an unexpected macro signal, say from tomorrow's CPI data? What kind of ripple effect could that have on these emerging altcoin trends? And maybe more importantly, how prepared are you listening right now for that kind of volatility in your own portfolio? It's definitely something to consider as we navigate these very dynamic markets.